excited to do this with you, Shane. It's been a long time. You got good mitts. That's one thing. I have very skinny little fingers.
Do you?
Uh-huh. Me and Rebecca almost have like the same ring size.
My father-in-law has giant sausage fingers.
You kind of do too. I don't.
Do I?
Yeah.
They're bigger than mine.
Wow.
Girthier.
Jesus.
Fingers.
What's going on, y'all? Welcome back to the Lending Bros podcast. My name is CJ Moss.
I'm Shane Sharp.
And we are back from our New Year's hiatus. So, Shane,
Only episode 8.
We're at episode 8. Yeah, feels like it's been more than that.
Yeah.
But it is 8, according to our statistician, Mr. J. But so yeah, what's been going on?
Spring break, and kids are off for a whole week.
Yep.
So, just try to play lots of family games. And my son just turned 13, which is depressing.
Officially a teenager.
Yep. I can still kick his butt in Mario Kart, so that's good.
That's good.
And yeah, it's all
Is he taller than you?
So he's 5'11".
Okay.
And he's exactly the same height as me.
Okay. So he's going to pass you for
absolutely
sure.
gonna be taller
Yeah,
than me,
yeah.
for sure.
Because what, 13? He's sophomore? Freshman?
In college?
No. High school.
No, he's in 6th grade.
That can't be right.
Yeah,
Is that how that works?
that's how it works.
He's 13.
He should be in 7th grade, but we.
8th grade is high school, yeah.
Oh, man. Okay.
No, 8th grade is not high school. 8th grade is middle
Sorry,
school.
ninth.
9th grade is middle. Yeah. So how old are you when you go into high school normally? Like 15, 16, right?
15. Yeah, normally you're 15. 14, 15.
I was 14, yeah.
Okay. All right, man. All right. Well,
I
we're
just
gonna
want him to be driving when he went into high school, so he could
for sure.
pick up all the chicks.
Yeah.
Yeah.
But all right. Well, we're gonna start with our favorite segment, Only in Dallas. We've talked about this guy before. Our man Leston is in 2024. So Dallas, Texas TV gave him a shout out. It's kind of funny. Said he made history by selling $69 million in 2024, which I mean, monster year. I don't think it's in the history books, but it is a monster year because I know he does a lot of it. Like I don't get the vibe he has like a team. Like I think it's like I'm sure he has support
maybe
staff
an admin,
and stuff.
like
Yeah,
one-
but
yeah.
like I mean that's a lot of transactions for like a
69.
single agent to make.
Yep.
And then all right, we're gonna watch the video. Watch this top left one. Oh man. Just in the middle of Mockingbird and Greenville, we've got a relatively large pig.
Pig just humping a curb?
Yeah.
I think that's what's going on
At
here.
first, I thought the pig was kind of small, but when you factor in like how long curbs are,
So long.
that thing's at what, at least
This
4
big?
feet?
Yeah.
Yeah. I would own a pig.
Would you? A pet pig?
Yeah.
What would you name your pig?
Ooh, Wilbur.
Earl.
Earl.
Yeah.
Why?
I don't know. It just feels right.
Okay. I like that.
Wilbur, is that from, it's from,
Charlotte's Web.
yeah.
Yeah. Shout out.
Shout out.
All right, we got a wrong way driver. Let's see. It always fascinates me. I feel like I hear about this pretty often, and it doesn't make sense to me how you could do it. This is like this is like rush hour too. Interesting. Because I do think there's a scenario where this happens unintentionally. Maybe not. Maybe people are just like
Screw it on YOLO. I'm going to go
trying to
drive.
kill themselves kind of thing and just like,
And they just kept going, too.
at that point, what are you going to do? I guess you could turn around. That would be.
That's what I would
That's
do.
probably the answer.
Put
Stop
it in
what you're
reverse.
doing, and yeah, it's fair.
That's crazy.
Um,
Are we watching the
wait,
third one?
what is that? It's moving, isn't it? It's just a wind, I think.
That music, too.
I wonder where that's
The Jurassic
going.
World music. There's like a Jurassic World museum.
Probably where it's
thing,
going.
right?
That was in Grandscape for a while, wasn't it? Yeah. And honestly, I wonder if it's going to the Universal Studios in Frisco.
Is it already like at that point?
They're building it for sure. Yeah.
Is it already like?
It opens in 2026.
Really?
Yeah. Don't quote me on that. It might be 2025.
That's exciting.
Yeah.
Could be tomorrow.
Could be.
Yeah.
Let's see, last one. Oh, he's like dancing. That's kind of cool.
Looks like those are like wider than I thought they would be.
Maybe, or he's just that talented.
Maybe.
All right, so this is our, like I said, first episode back from the new year. So, what's been going on in the world of the Sharp advisors and in your life and in mortgage?
Man, in the mortgage space, really just been spending a lot of time with the team, kind of trying to hone in the process and make everything smoother. The next part of the year is typically the busiest for all of us, right?
Yep.
In the second quarter of the year.
Yep.
So just making sure everything's all honed in and tightened up on the business side of things, but really pretty uneventful as far as like major changes on stuff. So what about you and the Moss group?
Yeah, man, I feel like we've started to see a bit of a shift in the market. Like we had 8 or 9 offers out last week, and I think, at least 3 to 4 of them were in multiples.
Yeah.
Right. So the good thing, right, if you're a buyer, right, is the multiples are going, $10,000 over, right, instead of 100,000 like it was, 3 or 4 years ago when we had a lot of multiples.
Yeah.
But appraisal waivers are starting to be a thing again. I had a client who, the seller requested appraisal waiver since they were going a little above ask. So it's starting to get. I think there was a brief period of time where it was a bit of a buyer's market. I'm seeing it be pretty level, honestly. There's certain
neutral,
homes that, if it's priced right, if its condition is good, if it's updated, it may go into multiples and be a little bit more of a seller's. But I think for the most part, it's pretty even right now.
What city was that in?
McKinney, I think.
Okay.
Yeah.
Interesting, man. Yeah, because I know Flower Mound have a couple buyers that just contracted in Flower Mound. One was in multiples. We beat them out. The second one, unfortunately, they're in a backup offer, so they lost it. But people are still, like, contingencies are still being accepted in some areas.
Yeah.
But also, like, if you're looking in Plano, Frisco, McKinney, like any of those hot cities, I think we're going to start to be in that market, which is honestly it's fun for us.
For
right?
sure.
We can compete and play really well in that market.
What would you say your strategy is when it comes to multiples, right? If you have a realtor who comes to you and says, "Hey, they already have an offer," what's kind of your, what do you recommend?
Yeah, so I think it's kind of like a 3-tier approach. Like, number one, we need to make sure that the buyer has the right expectations of the buyer first. So talking to them about, okay, if we were looking at any kind of seller concessions, those probably need to be the first thing that come off,
Yep.
right, or heavily reduced. And then maybe talk about future pacing them for payments. Every $10,000 is $70 a month, the difference in payment, right? So if we need to go up higher, kind of discussing that with the buyer's agent, making sure that any kind of feedback or information they have that we can poke holes when we call the listing agent, and then just doing what you and I do, call the listing agent, be the secret spy, try to get other information on the other offer. That still shocks me how much stuff sellers agents share.
Oh,
on,
for sure.
Like other offers that they won't tell the buyer's agent.
Yeah. No doubt.
And then just really fast offers. People in this market are selling for a reason.
Yeah.
So they probably would benefit from closing in 2 weeks.
Yep.
A lot of people can't do that. Like we can, right?
Yep. For sure.
What about you? What do you do?
Yeah, I mean, I think it kind of breaks down into always, quick closing, right? For sure. Even if there's a lease back scenario or anything like that, right? Like most of the time sellers want to get it off their books. It helps them with what they're doing moving forward, or they just want it, to be wrapped up, right? So quick closing for sure. That's always number one. Like I talked about, we're doing a lot of appraisal waivers in that scenario. Trying to get the appraisal back, quickly with an option. And then, if you're having a 5 to 7 day option, I tell people anyways, if we're aggressive, to do third-party financing at 5 to 7, as far as to get approved within that timeline. So a lot of times we're just waiving that, and then getting your underwriting approval with an option.
Dude, our underwriting team has been on point.
No, they're murdering it.
Like
for
24-hour turn time. It's been incredible.
Yeah.
So that's been super helpful with getting aggressive on that too.
Sure.
Do you want to talk about appraisal waiver? Like what that kind of looks like? Like what does it mean to do an appraisal
For
waiver?
sure.
What's your
Yeah.
strategy
So what an appraisal waiver means is that you will be terminating your right to cancel the contract if the appraisal comes in below what you offered. Obviously, for obvious reasons, the sellers like that, right?
Yep.
It helps them feel like they're you know, you're not going to come back to the table and try to lower the price that they've agreed on, everything like that, right? So on the buy side, one, it obviously, you know, you want to run numbers at what it looks like if, you know, let's say you come in $20,000 over asking. Generally, when I run numbers, I'll run it at the 20,000 over, but I'll also run it at what it would look like if appraisal comes in at list price, right? Because there's normally there's a reason that it was priced at that price point, right? We have a really good appraisal team that, you know, if there's a way to make value work, they do. But that's obviously not all the time. So on the buy side, right, something that I feel like is really helpful is because Benchmark owns their own appraisal desk, we're able to get appraisals back in, you know, 2-3 days. So for the buyer, we can protect the buyer where they can sign an appraisal waiver, but get that back within option period. So as you're creating aggressive offers, it makes your offer look really good to the listing side. But on the buy side, you're a little more protected on there by getting it back with an option.
Yeah.
So,
Love that, man. It's crazy how many
I don't know if
people-
I should be saying that part out loud, candidly, but
Well,
sorry, listing agents.
sorry about that. We get our business from buyer's agents, so that's
Yeah.
great.
Yeah.
I think a lot of the thing, I saw the statistic the other day, so I had to find it. Lisa Sturtevant, chief economist
Lisa.
of Bright MLS, said between 2010 and 2024, according to home price data across the Bright MLS service area, I have no idea what that is, home prices are an average of 15% lower in January and February than they are during the month of peak home prices. And then there's a fun chart on here too. I thought this was really interesting. It kind of said what the price median sales prices were like all throughout the year, and they peaked in May, June, July, which makes sense because that's when data, all the activity and everything turns over and everything for home sales. So I think having that appraisal waiver, if you're a smart seller and a smart listing agent, and you're pricing your house correctly at list, and you have an aggressive offer that someone comes in with, I really feel you probably should be asking for that waiver.
For sure. Oh, if you're a listing agent, yeah, for sure. I mean, you remember back in, you know, COVID where they wouldn't even accept offers without them, right?
It's like a requirement, yeah.
That's where we kind of honed that strategy that I'm talking about, right?
Yep.
But yeah, no, if you're a listing agent, even if it's list price, right? Like you're still protecting because that's the whole crazy thing about this industry, right? Is a lot of it's built on one person's opinion that day as far as an appraiser, right? So, you know, if you don't know the lender that you're working with, they're not a local lender. If you're a listing agent, even if it's, you know, list price, I would try to get an appraisal waiver.
Yeah, you had one appraisal that was like 20,000. Someone else had an appraisal that was 20,000 short.
Yep.
Then you got the appraisal back in like 2 or 3 days, and it was
It's like 5,000 over, I think, something like that. Yeah.
$25,000 spread is from a couple days apart, same
Yeah.
house.
For sure.
Crazy.
The important thing is, right, like you've got certain appraisers that think, you know, whether it's a neighborhood or whether it's, you know, the market in general, that they're making adjustments for a market that just aren't really there, right?
Yeah.
And that's why it's really important to have a appraisal pool of good appraisers, talented appraisers who are, you know, of this world and living in the real world as far as what home prices are going to do and
Yeah.
home values.
Yeah.
For sure.
And I'm going to mess up the statistics, so maybe you know it, but I mean, 2025, I mean, we're seeing home applications. I think we're setting up 2025 overall in the industry to be really, really big year.
Yep.
Applications for the branch are up 20-30%.
Yeah, I would think that's about right.
And we've seen as far as home interest rates are down, I think 6 weeks in a row. Is that?
Yeah, I think so.
So seen a little bit of turbulence the last 10 days or so, but still has been really good last 5-6 weeks.
Yeah. I actually, you know, I think the expectation right at the start of the year was not a whole lot of movement in interest rates. I think it's interesting. With a lot of the instability that's going on in the stock market and in the political world and everything like that, I could see a scenario where we see lower rates than anticipated.
Yeah.
Just because in general, right, the bond market where mortgage-backed securities and interest rates are pulled from, a lot of times is the inverse of the stock market. You've got people taking money from the stock market and putting in the safe asset of bonds whenever that happens. So it wouldn't shock me. I think that's one of the reasons we've seen movement that. Plus, you know, it seems like there's some good progress being made with inflation.
Yep.
That I could see the timeline being sped up a little bit
Yeah.
when it comes to, interest rates and what they do in 2025.
For sure. What do you think about inventory? What do you think homes, going to hit the market? Do you think it's going to get more competitive? What do you think is going to go on with as inventory kind of shifts?
Yeah, I think, we've seen inventory increase this year, and we're anticipating more inventory than 2024 in 2025. I think as rates start to drop, or if rates drop or stay where they're at, right? I think you've got people that are sitting on the sidelines waiting for rates to drop, which we've gone over plenty of times on this podcast is not a good idea, but it doesn't mean they're going to listen. And so, I think there isn't enough inventory to solve demand if rates do hit the fives,
Right.
Right. But I think you will have certain people that have been waiting for rates to drop for 2 to 3 years that just decide they need to move, right? So
Right.
I would expect inventory to increase a little bit this year, but I would also expect demand to increase, right? So I don't think we'll get a whole lot of progress as far as a buyer's market necessarily.
Yeah.
But I do think there will be more inventory along with a little more demand in 2025.
For sure.
What about you?
Yeah, I mean, I think we'll start to see. I mean, a stat that I saw was that. Let me see if I can find it. So the average homeowner with a mortgage now has $319,000 of equity in their home. So
Wow, that's the average homeowner.
the average homeowner,
Wow.
and $207,000 of that is what they call tappable. So you could do like home equity line of credit or cash out refinance, something like that.
Yeah.
So, I mean, there's a ton of, I think, we're seeing credit card, revolving credit card usage, all-time highs in the trillions, right?
Yeah. I saw a stat too, where cars they're at a car payment delinquencies are at an all-time high too.
Really?
Yeah.
I mean, the average payment, I know last year was like, the average payment was $850-ish a month
Yeah.
in 2024. So I couldn't imagine what it is now.
Yeah.
Probably even higher than that.
For sure. So again, I think using equity to pay off a car, pay off high interest debt, pay off anything that is a higher interest rate than what you would get from whether it's a HELOC or whether it's a cash out refinance, I think makes a ton of sense.
100%, man. Yeah.
Just so for anyone who doesn't know, explain the differences in a cash out refinance and a home equity line of credit.
Yeah, so really there's 4 ways to get cash out of your house. You could do what's called a cash out refinance where you have a current loan, you pay off that entire loan, and then you take out equity from the house. So you have a 7% rate, 8%, or a 3% rate. Doesn't matter. That first loan goes away. You open up a new loan, and you pull cash out. So you actually refinance the entire loan, and they give you a check at the end of it, right? That's a cash out refinance.
So who in this market do you feel like that would be a good fit for?
I feel like in this market, anyone that has, I was just talking to someone that had a $150,000 loan at a 3.2% interest rate. So they have a great rate. They didn't want to leave that rate, but they had $200,000 in credit card debt. So, and their credit is also not very great. So in their scenario, paying off this credit card, all these cards could be life-changing for them.
Yeah.
In that scenario, anytime you have your cash out that you're taking out exceeds the amount that you're paying off, the paying off debt, the first loan amount that you currently have is irrelevant as far as the rate. So I feel like if anytime you're paying off debt that's 20-25% interest rates, don't worry about what your interest rate is that you're paying off in the refinance. You're going to save so much money; it's going to be beneficial for them, helpful. Whereas if you have let's say you have a $600,000 loan that has 3 or 4% interest rate, and you have you just want to take out $100,000, so you're taking out less cash than what you owe on your first loan. That's where what's called a HELOC or a home equity loan would make sense. You get to keep your current loan where it is, so don't touch that current interest rate.
Yeah.
And then you have a slightly higher interest rate on the home equity line of credit or the home equity loan. One allows you to keep making regular draws. One's a fixed amount, right? So they both kind of have their purpose. But that way you're not having to pay, able to save some money in closing costs. You can keep that good rate that you have on there as well.
Yeah.
And then the last option is obviously selling.
Yeah.
And if your current home isn't fitting your needs, I think I heard you and Marty say that. But go ahead and say it. I'm going to butcher it.
No, I think a lot of times, right, if you are, so 60% of the United States, if you have a mortgage, you have a 4% or less interest rate, right? And I think a lot of times people are looking at it wrong, right? They're looking at it from leaving their 3% rate to going to a 6.5% interest rate and the difference in payment there.
Right.
Right. But I think the question needs to be asked both by lenders out there and definitely by realtors out there is is this your forever home? Because if, are you going to move in 5 years? If the answer is probably yes, then the home you're living in is pretty irrelevant, right?
Yeah.
Because we've already established that that's no longer going to fit you for, the next 5 years or in
Right.
5 years. So the math you need to be doing is what it looks like to move now versus 5 years.
Yeah.
Not what it looks like to leave your home in your current payment and, move.
Yep. But yeah, I mean, as far as the inventory side, I mean, NAR said 51% of buyers are also sellers right now. So if you're incentivizing current homeowners to maybe lessen the burden of higher rates, right, which we're seeing right now, then you're going to incentivize those sellers to also buy another home. And I think that's going to put a lot more inventory on the market. It's going to get some more buyers that don't own off the sidelines, or maybe they own, they sold, and now they're renting. So we're going to start to see hopefully some good movement there on the inventory side.
For sure. Yeah. All right. So my personal favorite segment, this is going on to Reddit, which Shane Sharp is a very popular person on Reddit, I hear.
Yeah.
You get a lot of leads from Reddit, don't you?
I do, man.
Yeah,
I do.
that's awesome. So shout out.
I haven't closed any of them yet.
If
But
you're on Reddit and thinking of purchasing a house, this is your guy.
I'm your guy.
He would love to talk to you. What happened to house prices after April 2025? What would happen? I'm sorry, reading is hard. Stamp duty discount cut for first-time home buyer and stamp duty increase for second-time home buyers.
What is going on?
You know what that means?
I have no idea what's happening right now.
Okay. I could expect less demand for housing, but what would happen to supply for housing? Would people tend to not put their house up for sale in such scenario? Any guesses or thoughts on what would happen to the house prices after April 2025? And then Mary Giftmas responded and said, they will either go up, go down, or maybe stay the same.
So insightful.
Very wise.
Yeah.
One of these changes are going to have a big impact on their own. Most first-time homebuyers are spending less than $300K anyways. Depends on the market, Mary Giftmas. And a couple of percent isn't the end of the world for someone buying multiple homes. This will only be a deal breaker for a small minority of buyers.
So yeah, I Swear Down said when stamp duty relief was introduced, what happened? So here's
What is
probably
stamp? Oh, this is
housing you
oh,
okay.
okay. This is in
So-
the United Kingdom.
So
Got it. Okay, so they got something going on where they're discounting called stamp duty.
Stamp duty relief.
Let me see if I can look it up real quick.
So this is interesting because right now, especially with like TikTok and Insta and YouTube Shorts and stuff like that, we're seeing stuff from people in other countries.
Yep.
Something that typically pops up in like UK and Europe homes is it's not an assumable mortgage. I think they call it a transferable mortgage. That's
Yep.
a thing over there. So
It
you
is.
can actually, if I have a 3% interest rate on my house, I could buy another house and transfer that mortgage loan to another address. That doesn't exist in the United States. So I'm actually glad this popped up so we could figure out what the heck stamp duty is.
So stamp duty over in the United Kingdom is a tax that is due if you buy a property or land over a certain price in England or Northern Ireland. So you have to pay a tax when you buy a freehold property, buy an existing leasehold, a property through shared ownership, or a mortgage. And the amount of stamp duty you owe depends on the cost of the property or whether it'll be used for residential purposes or any other purpose.
Isn't this a thing when you sell a house in California, where if your house is over a certain price, you have to pay like a luxury
It sounds like a
fee or
California
something?
thing.
Yeah, definitely not in Texas.
So the threshold for buying their first property is $425,000. So if it's above that, you have to pay stamp duty. And then if it's less than 925,000, it's 5%. If it's more than 925,000, 10%. And if it's 1.5 million plus, it is 12%.
Ouch.
Yeah,
That's painful.
that is very painful. So be happy if you live in the United Kingdom and you don't want to pay stamp duty. Come on over to America. Reach out to Shane on Reddit. Come on to America, and you got no stamp duty here. We've never even heard of it.
Nope.
So problem solved.
Just don't go
Next
to California.
question.
Yep. All right. How can loan officers stand out? Oh, is this? Okay, so we're going to read the next story on here, right?
Yep.
All right.
That's how this goes.
So it worth it to become a loan officer. Should probably learn how to speak English first. That'd be a good first step. Hey, everybody. So this is for Waste Appearance 191. Like the title says, is it worth becoming a loan officer today in today's market? I just turned 20 and have been seriously considering joining the industry. I know the mortgage market has had its ups and downs, but I'd love to hear from experienced MLOs, mortgage loan originators. How was your first year? What were your biggest challenges starting out? Would you still recommend this career to someone new in 2025? What are the biggest pros and cons from your experience? Any insights would be greatly appreciated. Thanks in advance. What are your thoughts on this one?
Don't do it. No, I'm just kidding.
Run.
I think it depends, right? So as far as what the conversation I have with loan officers, right? If you are brand new, just getting into the industry and wanting to do something like not work on like a team and do like shared business or anything like that, you need to give yourself at a minimum 6 months, probably 12 months to build a runway, to get business, to have reserves. So I think it depends on where you're at in life, right? If you've got like a wife, family, everything like that, and you're trying to brand new get into the loan industry, just be sure you've got, reserves saved up. I recommend it. I think if you're hardworking, if you are willing to grind, I think it's still an industry a lot like real estate, right, where you can kind of come from nothing and make a very good income. It's kind of unlimited, right? You can make as little or as much money depending on how hard you work and how talented you are, which I think is always good. I think biggest pros is just that, right? It's there isn't a ceiling, but one of the biggest cons is the vice versa of that. There isn't a floor. You can make $0 for a year if you aren't doing what you should be doing. So I would really recommend, if you're getting new into the industry, to reach out to someone who is doing it and doing it at a high level, and see if they're willing to hire you on as whether it's an assistant or a production partner, or whatever you want to call it, so you can learn from them and learn how it's done at a high level.
Yeah.
What about you? I'm curious your opinion on this.
So I want to look up some stats so I wasn't saying it. I would say if you're young, I'd say if you're young and you're not currently licensed or in any way in mortgage, I think it's a really tough industry right now to break into, man. I just had to look up some stats on this. The average loan officer in the United States closed 21 units last year. That's just under 2 a month for a total of 6.6 million in volume. Man, if you have a family and you're a single income, like that ain't paying the bills. Another stat on here, that was from Instagram, some random Instagram videos, so take that for what it's worth. Another stat that I saw said that 24%, some of the majority of loan officers make between $81,000 and $102,000. Again, like with the industry of AI and stuff like that, I think there's a lot more lucrative industries to break into as they're kind of ramping up on there. But I think that the biggest blessing that I've had, I would not do anything else. And I think the biggest blessing that I have is having flexibility to go and make as much as I want, and also make really, as little as I want, and kind of balance and counterbalance personal time and everything like that. So it really kind of depends on what your priorities are. If you're looking to make as much money as you possibly can in the next 24 months, I don't know. I think there might be other stuff to consider on there.
For sure.
But there's a guy that just did, it was in Kentucky, and he was a Major League Baseball player, right?
Baseball player for sure. I don't know where.
Baseball player. definitely at the collegiate level or something like that, right? Came in first year in the business, and he's consistently, every other
It was
month
like 20
top
million,
10.
didn't he? Yeah.
Yeah, top 10
Yeah,
in the
he
company,
killed it.
right? As far as volume closed, so he's killing it, man. So you can definitely do it out there if you grind.
Yeah, for sure. Yeah, I think it's just kind of like everything that's a fully commissioned role. I think it just depends on how much you're willing to grind, right? Like you can absolutely make enough phone calls, set enough meetings to hit the ground running and, close 4 to 5 million within the first couple months of closing. There isn't a large portion of the population that is willing to grind like that
Yeah.
without a guaranteed return and staring at a paycheck that's $0 the first month.
Yep.
Right. So it kind of depends for sure.
So I got a question on that. This is when we're talking about AI. How do you think automation and AI are changing like the lending process overall?
Man, I think we're just starting to see some stuff, right? Where there's certain like document readers, there's certain ways of allowing AI to help to where you're spending more time doing the most impactful things. So having conversations with buyers, having conversations with realtor partners, meetings, stuff like that. I personally don't feel like we've necessarily arrived to a market where it's like as AI as it should.
Yeah.
I think if you ask me this conversation in the next year, I think it's going to look totally different.
Yeah.
I think we're kind of at the doorstep of AI in lending and really candidly in everything, right?
Yeah.
But to where it's a big effect. But you're kind of more in the tech space than I am, honestly. What have you seen?
No, I mean, I think there's a lot of stuff that's in early stages, but it's not really super usable on a daily basis. I think, our biggest, I think anyone in any industry, when you see AI, you're like, holy crap, our job, like this is going to take our job. I don't really foresee it doing that from what I can see right now. Maybe in 10 years from now, who knows? But from right now, I think a lot of what it'll do, when the market really had a readjustment in 2022, unfortunately, a lot of people in the industry, real estate, mortgage, and a lot of industries lost their jobs. Things will start to turn around, and we will start to see an uptick in volume. So my thought on it is, I don't think it'll take or replace jobs. I think what I foresee it doing in the next 2 years is allowing the current people that are in mortgage and employed to do twice as much volume without working 80 hours like we had to in 2020 and 2021.
Yeah.
I think that's the direction that I see it going.
Yeah. All right, let's do another Reddit. So this one is from CB3B. Talks about, the title is, how often do offers fall through in 2025? So I came across a very similar post asking this question from a few years back and was wondering if anything material has changed since then that would give a better sense of the odds today. My wife and I fell in love with the house and made an offer yesterday for $20K over asking. We lost out to another offer, and we understand it'd be in the neighborhood about 30 to 35 over asking, but we are apparently the runner-up and have been told that the seller's first call will be if it falls through. I'm particularly curious on whether it helps our odds that they offered so much over list price. The house is amazing, but I don't think it's going to be appraised for more than 10K over listing. Maybe I'm in denial, but I'm clinging to the idea that the winning bidders overextended themselves. Once the appraisal plays out, edit for the people, I guess is what that should say. It's just died. So how did you finish?
This is edit for the pedants ITT. I don't know what that means. Maybe I'm old. When I say in 2025, I'm not looking in for info strictly relating to the short time frame between midnight on New Year's Eve and this very moment. Just general towards dental trends over the last couple of years since linked in the post above.
Yeah.
This is good, man. I mean, it's super frustrating from someone, especially for my first home. I don't know if these are. I think the two important things here is like, where's this market at exactly? Like, what area are they in? And number two, I don't really know if it's relevant, but I don't think they say this is their first house, assuming it might be. From someone who lost out on multiple offers for my first home, like it sucks, man. Like it's a punch in the gut, even when you make an aggressive offer. But in this situation, I think they're going about it the exact right way that I would coach buyers that go through it. Is you made an aggressive offer. There's aggressive offers, and then there's ignorant offers.
Yep.
And if you make an aggressive offer and you lose it, you should always feel great about losing that because that means someone else overpaid. And I think that's the lens that they're looking through it on. In a normal market, I'd love for some keyboard warriors to correct me on the statistic on this, but I think it's something like 20 to 30% of contracts fall out during option period for one reason or another.
Feels right to me.
So,
I know we plan on like 10% fallout,
Yep.
right?
Yeah. That's probably
And that's before it gets, some of that's before it gets to us as
Yep.
far as fallouts and stuff like that. So,
Yep. So like if you know someone overpaid for the house, they could be overpaying for the house up front, so they can negotiate a bunch during inspection. They could be playing the game where they wait for the appraisal that comes in short. And, oh my gosh, the appraisal came in short. What do we do?
yeah.
So I think you can put the buyer's feet to the fire and put in a backup position. It's kind of a hot take on there. Some people like or dislike backups, but even if it's not an official backup offer, even if it's just kind of another offer hanging out there,
Yeah.
I think there's a good chance, probably 1 out of 4 chance that you get the house.
For sure. I don't know. Maybe this is a hot take. I don't know. I would not just be the, hey, yeah, if this doesn't work, we'll call you. I would push, and I know some listing agents don't like doing it. I know some buyers agents don't like doing it, but I would push to execute a backup offer.
I
What
agree.
that means is if that offer falls through, it is then automatically goes to your offer. It's not they call you, and because obviously they can, if that happens, right, there could be another offer that slips in that comes in at a similar price, or you can kind of keep playing that game. So I would ask your agent, or to ask the listing agent if they're willing to officially execute a backup offer, to where it is officially yours if it does not execute.
Yeah.
That's the only difference I would do. And yeah, I would put it somewhere in that like 15 to 20% chance.
Yeah.
Would be what I would guess. And maybe to your point, maybe that if an appraisal waiver wasn't signed, those odds probably bump to 25 to 30% if you went 35 over asking.
Yep.
Yep.
Yeah. That's good, man. What are some ways that you're kind of helping through and kind of coach agents to close more in this market, both like lending solutions and financing solutions there?
Yeah, I mean, I think the biggest thing as far as to close more deals, right, is you have to have a lender who isn't just going to be cookie cutter, right? Like in this market, if we've seen a lot of like more challenging deals come out of it, right? Because they're more willing to purchase in a high interest rate market environment. So you've got to have a lender who's familiar with all the non-qualified mortgage things, right? So whether that's bank statement loans for self-employed clients, whether that is down payment assistance for clients who don't have a lot of money or anything in between, right? I think you've got to have someone who is not just going to take an application, see, oh, well, they got a 600 credit score and not a lot of money, or oh, they're self-employed and write off all their income. Sorry, call me when you get a person with 800 credit score and 20% down. So that would be the biggest thing. I would, if you're a realtor who feels like they're getting leads, but the leads aren't closing once you send them to the lender, that doesn't necessarily mean it's the lender's fault, right? That's not what I'm saying by any stretch.
Yep.
But I would ask the questions of, okay, like what are we running them through when we get the application?
Yep.
Are we just, quickly looking at it and moving on to something more qualified? Or are we actually having conversations with clients as far as, alternative methods instead of just, Fannie, Freddie, or Ginnie?
Yeah.
What about you?
Yeah, I think could be a hot take on this, but I'll say it. Like I think I'm all for niches and having specific areas of expertise, but I feel right now it's more important than ever. Put it this way: you wouldn't work with a financial advisor that 90% of their business is life insurance. You want
Correct.
a financial advisor that's very well rounded, that can do a full comprehensive review of everything, and just full transparency. Like for myself, I think I might have closed, maybe a dozen down payment assistance and a couple bank statement loans prior to 2022.
Yeah.
Just because it was so busy, there was so much, just easy fruit to pick.
Well, you weren't getting down payment assistance offers accepted 4 years
Yeah,
ago,
yeah.
right? Like you weren't even getting FHA, even if it was normal,
Yep,
right? So,
yep.
yeah.
So I think that's a good thing that kind of came out of this market shift, is it forced us all to get more educated on different products and to be able to be more of a comprehensive advisor through that. So, to buyers agents and realtors, I would say make sure that your lender has a full comprehensive understanding of different loan options, so that someone does come in that's self-employed that claimed $5,000 income
Yeah.
on their taxes. How can we get them to the finish line?
Yep.
Either coaching them through, working their CPA, or bank statement options.
Yeah.
Right.
And it's a pretty easy conversation to have as far as to tell, right?
Yeah.
As far as like, hey, tell me about some of the options you have for clients with little money, right? Or tell me some of the options you have for self-employed clients.
Yep.
And if you're not getting a super confident factual response to that, as far as like, yeah, here's what I would do, here's the programs, here's what they're called, then your radar should probably be going off a little bit.
Yeah.
And you should be looking for someone who can answer it a little better. Because if they can't answer it to you, they're not going to answer it to clients.
For sure.
Yeah.
Last thing to touch on, what special lending programs and strategies are you doing right now to help agents?
Man, so we're doing a lot of, we've started to get some traction on, so agents that we partner with on their listings, right? We're offering a 1% buy down for their interest rate. We're getting a lot of traction on that. It can help one of two ways, right? You can use it to be more affordable, or if you want to just transfer that to be a 1% credit towards closing cost, or to cover a difference in, like realtor with NAR. I know you've got a lot of people who are having to bridge the gap between what the seller is willing to pay and what the buyer's agent is worth and is going to charge.
Yeah.
And so that's why we started the program. But a lot of times it's going towards the buyer's interest rate or closing costs. So that's one of the more popular ones that we've been seeing.
Yeah.
What about you? What programs? I know you've got a similar one.
Yeah. So we do a program called Sell Like a Builder. Whole premises, you can do a new construction home and new build, and you get all these special like rate options, and the builder's buying the rate down. So we want to also bring that to pre-owned homes and pre-owned sellers as well. So what we're doing is we'll actually do a cost sharing breakdown with the seller, where the seller covers 1%, we'll cover 1% for doing a 2-year rate reduction option. You could save $400 to $800 a month on the first
That's awesome.
year.
Yeah.
And that way it's not just monopolized for builders. Now, pre-owned sellers can have that same kind of marketability on there too.
I love it.
Yeah, man.
Cool.
Well, sweet. Well, man, it was great to do this again.
Yeah, so it's good to be back.
Yeah,
for
I
sure.
completely forgot my tagline. So
It's stay informed, stay cautious, and
protect your financial future.
right.
Wow.
Is it not written down there?
It's not.
Not actually,
All right, hit them with
All
it.
right. All right, guys. Well, stay informed, stay cautious, and protect your financial future. Have a great one.